Welcome to Matters Financial and Geopolitical from a Frontier. Trust you had a good weekend. Let me start with a tweet from Tracy Alloway. Between Bitcoin, gold, and long-dated bonds, the bubble portfolio must be on fire. And that segues into my article, which was The Wizard of Oz World. The Wizard of Oz is a film made in 1939 and widely considered to be one of the greatest films in cinema history. It is a version of L. Frank Baum's 1900 children's book, The Wonderful Wizard of Oz, and featured the then child star Judy Garland as Dorothy Gale. The wizard is one of the characters in The Wonderful Wizard of Oz, unseen for most of the novel. He is the ruler of the land of Oz and highly venerated by his subjects. Believing he is the only man capable of solving their problems, Dorothy and her friends travel to the Emerald City, the capital of Oz, to meet him. Oz is very reluctant to meet them, but eventually each is granted an audience, one by one. In each of these occasions, the wizard appears in a different form, once as a giant head, once as a beautiful fairy, once as a ball of fire, and once as a horrible monster. When at last he grants an audience to all of them at once, he seems to be a disembodied voice. Eventually, it is revealed that Oz is actually none of these things, but rather an ordinary conman from Omaha, Nebraska, who has been using elaborate magic tricks and props to make himself seem great and powerful. Last week, we witnessed some Wizard of Oz level moves in the markets. The universe of negative yielding bonds grew about $1.2 trillion, pushing the total past $13 trillion for the first time. Last year, the tally of negative yielding paper was shrinking towards $6 trillion, only for the forces of financial repression to come roaring back as the global economy encountered turbulence. Greek 10-year bonds, which once printed 44% yields, are currently yielding 2.44%. This violent financial repression climaxed, or did it, last week, and the spillover effect is to be seen in gold, which crossed $1,400 for the first time since September 2013, Bitcoin, which in my considered opinion has never been about its utility, but all about its safe haven, non-correlated asset status, flew through 10,000, crossed 11,000, and was last at 10,875, and has posted a more than 195% return in 2019. The yen, which is plus 2.545% versus the dollar in 2019, was also on a tear last week. The S&P closed at an all-time high, up 17.8% year to date, and has had its best start to a year since 1997. The real estate mogul, President Trump, has been browbeating the Federal Reserve Chairman Powell, even threatening him with demotion. Last week, Powell, whilst holding US interest rates steady, signaled the next move would be lower. The market, fearing the arrival of the Wicked Witch of the West, has front-run Powell and has priced in 3 rate cuts within 12 months. If you were to look at the US economy in isolation, you would have to say such a forecast is absurd. The economy sure has some soft spots, but unemployment is at multi-decade lows and consumer spending, the key pivot, holding up. The US 2-year note, which is at around 1.75%, is the financial instrument which is the purest signal in all the noise. We are in nosebleed territory, and I'm afraid this is voodoo economics, and just because we have not reached the point when the curtain was lifted in The Wizard of Oz, and the wizard revealed to be an ordinary conman from Omaha, Nebraska, who has been using elaborate magic tricks and props to make himself seem great and powerful, should not lull us into a false sense of security. We might ask ourselves, what might the wicked witch of the West look like? Is it the spontaneous combustion of the once mighty Deutsche Bank and a multi-trillion-dollar derivatives blow-up? Is it a war with Iran that spikes crude oil and topples the oil markets? And think about this, a momentary blink of an eye, flash move in any of these markets would be deadly. The tariff war will be having its second truce dinner imminently. The first was in December and in Buenos Aires. And whilst Donald and Z quaffed sirloin steaks and Malbec wine, the Huawei CFO was being interdicted in Canada that time. What will happen this time is anybody's guess. Trump has been massaging the US markets ahead of his truce dinner, but he is gaming the markets, and like Obama once confessed, the US president is like a train driver. He can speed the train up or he can slow it down, but the tracks have already been set. Therefore, I cannot see any quick resolution around the tariff war. The US and its allies are upping the ante in the South China Sea. Hong Kong speaks to geopolitical volatility on the Chinese periphery, and meanwhile Trump stood down an Iranian strike when the planes were already in the sky. Iran has been pushed to the brink by Trump's coercive sanction warfare, and with regime stability now on a knife edge, it's clear Iran feels it has nothing to lose. Don't forget the real business of war is buying and selling. The murdering and violence are self-policing and can be entrusted to non-professionals. The mass nature of wartime death is useful in many ways. It serves as spectacle, as diversion from the real movements of the war. It provides raw material to be recorded into history so that children may be taught history as sequences of violence, battle after battle, and be more prepared for the adult world. Best of all, mass deaths are stimulus to just ordinary folks, little fellows, to try and grab a piece of that pie while they're still here to gobble it up. The true war is a celebration of markets. Thomas Pynchon, Gravity's Rainbow. We're at the cusp of an unprecedented financial moment. How it plays out is anybody's guess, and that's exactly why safe havens from gold to Bitcoin, from the yen to the US 2-year are bid. It's exactly when the market fears tail risks, really bad outcomes, are sky high, that safe havens go bid. Last year, this was the Financial Times, the tally of negative yielding paper was shrinking towards $6 trillion, only for the forces of financial repression to come roaring back. The world now has $13 trillion of debt with below zero yields. The message from the markets is that there are problems out there that central banks, not just the Fed, are now responding to. Ed Hyman. And then there's a link for the Wizard of Oz, Pay No Attention, which is the link when they lift the veil and discover, he's just from Nebraska, Omaha, Nebraska. The Bloomberg Barclays Greek government bond total return index is up 780% since June 2012. Yields on 10-year treasuries broke below 2% for the first time since 2016. As I've previously written, Trump is actually quite highly tuned to the markets and in fact something of a 21st century artiste. His positive trade war tweets are timed around the US market hours and designed to soothe, massage and finesse US asset prices, and he turns more negative in Chinese trading hours. And this is next level gaming, and there are few leaders I can recall that have appreciated the purity of the market signal and played the game at this Yehudi menuhin virtuoso level. Even the Global Times News admitted as much in a tweet. The US stock market is a better combatant than the Chinese one on the battlefield of trade war, says leading Chinese economist Li Daoqiu.